The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to this Friday edition of Scorebox. Well done, everyone. You made it through what was quite an extraordinary week. I'm Steve Sedgwick, and these are your headlines. So the S&P and Nasdaq seeing more fresh record highs. The Fed cutting rates for the second straight meeting, but the chair, Jerome Powell's press conference, as you might expect, is dominated by his personal future as the Fed chair under a Trump presidency.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
There you go. President-elect Donald Trump names campaign manager Susie Wiles as his chief of staff, the first key appointment to his White House team, as President Biden pledges to support the transition of power.
You can't love your country only when you win. You can't love your neighbor only when you agree.
The Bank of England cuts rates by 25 basis points whilst raising its inflation forecast in the wake of the government's new budget. Governor Andrew Bailey says they're closely monitoring the impact of Donald Trump's election.
When we analyse what are the sort of the underlying forces often driving movements in UK rates, then, for instance, developments in the US are important in that respect.
And German Chancellor Olaf Scholz faces growing pressure to hold snap elections, with industry leaders warning the economic challenges are too drastic for a weakened government. The Siemens Energy Chairman Joe Kaeser tells CNBC it's time for a fresh start.
The businesses don't need a lot of good advice. They need sort of stability of the political framework, and that has been missing for quite some time. So I believe this is now a good time for a new beginning.
Morning, everyone. I thought that Joe Biden quote in the headline summed up what it's like to be a sports fan. You can't only love your team when they're winning as well. I just wish my team would win a little bit more often. Anyway, more weekend woe ahead. The Fed has cut rates by 25 basis points, as expected by all of you pretty much, with Jerome Powell telling reporters that he believes policy is still restrictive. We had the same thing on this side of the Atlantic, actually. And economic activity remains strong. Now, the expectation for another rate cut in December is pretty much there. The markets are pricing in a more than 90% chance of a 25 basis point move lower. A lot of questions about January thereafter. But anyway, Powell said the central bank was not in a hurry to bring rates down to neutral, sounding a positive note on the health of the U.S. economy.
We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Now, Jay Powell said it was too soon to speculate about the impact of any policy changes as Donald Trump returns to the White House, but did warn that U.S. fiscal policy is on an unsustainable path because of government debt levels. Powell also responded to speculation the president-elect could ask him to resign, prompting this exchange with reporters.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
I think I get it. I've been to one or two press conferences in my life. You create these questions, you try and think of different ways to get him to say something. He's like, nah. Next. Nah. That's what we had to play all the, like, both in the headlines and there. We've had to play all the questions as well because his answer was nah. But you have to give it context. The Double Line Capital CEO, Jeffrey Gundlach, told CNBC the Fed will have to respond to policy changes from a potential Republican sweep of Congress.
If the House goes to Republicans, there's going to be a lot of debt. There's going to be higher interest rates at the long end, and it'll be interesting to see how the Fed reacts to that.
I just want to make an editorial point, and those of you who are long-term watchers of this show know that I come at certain stories with a certain angle, and I have done for many years. One of them is debt. I have been and will continue to be incredibly worried about the fiscal situation, which is one of those Rumsfeldian known unknowns or known knowns, i.e. we are racking up debts at a stunning rate in the Western world under stripes of all kinds of governments. Forget if you're a Democrat, Republican, you're SDP or you're CDU or you're Labour or Conservative. It's stunningly worrying. And I think it has huge ramifications for you, the audience, for you, the investor, for you, the bondholder, for you, the equity holder. I will continue to follow this as well. And I just think under a Trump presidency, under a Labour government in the UK, under Xi Jinping's China as well, under a French government that's got 6% deficits, under a German government that we haven't even got a German government at the moment that's cohesive on the debt front as well, I will continue to monitor this story and aggressively ask questions about it because I think it's a known problem which is creeping up the rails. So let's just carry on that vein, shall we? In the meantime, I'm delighted to say the wonderful Sylvia Morrow has come off street sign just long enough to join me on Squawk Box. How are you?
I'm great, Steve. It is a Friday, and you know who else has been doing pretty well this week? U.S. equities. But let me run you through the session actually throughout their moves on Thursday. It was, a Fed meeting day. We also overcame the uncertainty around the U.S. election. So looking at some of the performances on Thursday, we saw the S&P, the Nasdaq posting a fresh record high. On top of that, look at this, the Dow and the S&P at this stage are on track to see their best performance weekly since November 2023. Now, one stock that actually stood out yesterday, let me take you to it because we paid close attention to NVIDIA. Look at their performance yesterday. NVIDIA shares rallied and surpassed the $3.6 trillion valuation on two reasons, really. Investors have this optimism at this stage around potential tax cuts as well as lower regulation as they await the next Trump presidency. Now, let me take you to the bond market as well. What a week has been there as well. Now, at this stage, we are looking at yields pushing lower. You have them on your screen at this stage. Looking at the 10-year, the benchmark trading lower at 4.335%. Of course, investors here digesting what the Fed said, signaling that the labor market is cooling, but there's still solid economic growth. On top of that, briefly worth looking at the initial jobless claims data, which did not raise any concerns really about the health of the labor market. Now, let me take you to the currency spaces too. I want to take you to the dollar because there has been a change in narrative here. Yesterday, we saw the dollar, their strength basically easing overnight. The dollar index was down 0.7%. This was their worst daily performance since late August. So the strength we have seen recently has dissipated somehow. Looking at this stage to euro dollar crosses, for instance, the euro down 0.2%. Similar moves when you look at sterling versus the US dollar as well. Let me take you to the Asian session as well so we understand how we have been moving throughout the Asian session. It seems a bit of a mixed picture, but here the highlight, Steve, no doubt, is that investors are waiting for the outcome of the NPC meeting to understand really where China might take their stimulus measures next. We'll see.
Right. As part of my promise to you, the viewer, we're going to keep hitting every guest with similar questions about the ramifications, what it means for your wallet, what it means for your purse, what it means for your portfolio. We'll just keep hammering at this for days, how long does it take for you to get a clear picture of the following. President-elect Donald Trump has announced his first key appointment, naming one of his campaign managers, Susie Wiles, as his chief of staff in the White House. Meanwhile, President Biden spoke publicly for the first time since the election, telling staff in the White House Rose Garden that he was proud of the legislation he has passed and that his administration will leave behind the strongest economy in the world. The Indians might disagree with that. Anyway, Biden also committed to a peaceful transfer of power.
Yesterday, I spoke with President-elect Trump to congratulate him on his victory, and I assured him that I'd direct my entire administration to work with his team to ensure a peaceful and orderly transition. That's what the American people deserve.
Let's take a look at the map. The control of the House of Representatives is the last piece of the jigsaw, isn't it? Well, it remains in the balance, with the Republican Party currently 7 seats away from securing a majority and a sweep of congressional power. I guess the big question for many of us who's looking at the House is what's the flavour of the House? You know, because there's let's face it, there's a very wide set of opinions in the Republican Party in the House. Anyway, Eric Nelson is macro strategist at Wells Fargo. Eric, I'm almost lost for words knowing what to ask you because I have about 50 questions. So let's just start off with one. What do you make of the week we have just seen for your clients and my viewers?
Well, I think what's so key about this election is, obviously Trump won. We're probably going to have a red sweep, exact same outcome as we had in 2016. The difference is in 2016, really no one expected it, or very few did. This time around, it was almost the base case, right? So we had some of the pricing of this election came before the election, a complete contrast to 2016 when it all happened after. So if you think rates are going to go up another 40, 50 basis points in the next couple of weeks, you're probably going to be disappointed. Now, I think 2025...
When you say rates going up 40, 50 basis, you mean on the Treasury yields, yeah?
So, yes, yeah. So I think that we've had so much of the pricing leading into this that I don't think we're going to see a lot of follow-through just yet. Now it's a matter of who's going to be in the cabinet and when do the policies actually kick in.
Can I ask you just a question which I could ask you any stage in the last couple of years, and I can ask you any stage in the next couple of years as well. Why is the bond market, and I mean the global bond market, and we'll use America for this case, why is it so relaxed at 123% debt to GDP in the United States, a 6% deficit, which is looking like, under a Trump presidency, is looking like it could get to double-digit deficit levels? Why is the bond market so relaxed about that?
Well, I'm not sure it's super relaxed. I think it's
pretty relaxed. As you just said, there was no real move afterwards. We had a little bit of a drift up in yields ahead of it as well. We've gone from a 3 handle to a 4 handle on the benchmark 10.
Yeah, and I think if you look at the composition of the run-up in yields leading into the election, that shows that there is some concern. What I mean by that is if you look at term premium, it went up a solid 30 to 40 plus basis points leading in.
Yeah.
Break-evens, sort of break-even inflation, that component of nominal yields, has risen a lot, even as commodity prices haven't risen all that much. So there is some risk premium in there for higher inflation from tariffs, things like that. Now, to your point, okay, we haven't seen that the Liz Truss type shock that everyone's always kind of has in the back of their mind. And I think part of that is there's also the other side of the coin with Trump, which is deregulation for banks, possible reform on SLR, and what I mean by that is kind of allowing banks and almost encouraging banks to buy more treasuries. There are some offsets here, right? And so I think we have to see how this plays out before.
When you allow more banks to buy more treasuries, and I'll go back to that lovely doom loop scenario that we all learned in the last financial crisis, which we called the GFC now, but at the time, amongst other things, I called it the sovereign debt crisis, because when ATMs in Cyprus, in Nicosia, were having 2-mile queues, the world was worried. Now we have the greatest nation economically on the planet raising money left, right and centre. No one blinks an eyelid as well. So if I have this relaxation of regulation, and then, as you mentioned, the SLRs as well, and banks are allowed to buy more debt, doesn't that increase the old scenario? Don't we have to dust off the doom loop scenario?
I'm not necessarily sure.
It increases the risks on the bank's balance sheet, and it increases. And if the government thinks it's got a willing set of buyers, then it's going to issue more debt, isn't it?
Yes, yeah, and of course, there's always I think what's really key here is the question of growth, right? Are you actually going to have the kind of growth to support at least a somewhat less unsustainable path of debt to GDP, right? And that is maybe where I get a little bit more worried, right? Because we talk all the time about, okay, the deregulation and the stimulus and the positive growth effects. What about the tariffs? I hear a lot of people say, well, it's all a negotiating tactic. He's not really serious about the tariffs. I disagree. Yeah. I think he's very serious about tariffs. He's talked about this for decades. And if Lighthizer, his key trade advisor from 2016, is still in the seat for trade representative, I think this is growth negative.
Higher costs for Americans? Is that a slam dunk? Or because they paid him? I think one of the reasons why the Democrats got a caning is pretty much because of the cost of living crisis, because they couldn't transfer the fact that inflation had gone back down to near target to pump prices, to food prices. And that's why obviously we had the campaign pressures from the VP.
Yeah, and I think this inflation shock, if we really do see widespread tariffs, will be very different from what we saw in 2020, right? 2020 was a historic generational level shift in prices. This, to me, will be a little bit more insidious, kind of a steady increase in the rate of inflation, at least for a period of time. But I think it will mean higher prices for Americans, particularly if he goes anywhere close to what he's talking about, 60% on China, 10, 20% on all countries.
Let me ask you a dumb question. What do our viewers do in the next 2.5 months before the inauguration? Because I don't know, I wouldn't call the president a lame duck at the moment, but I mean, there's very little attention people are going to pay to the Biden administration compared with the incoming Trump administration as well. Is there a wait and hold strategy that our viewers should be looking at in asset classes?
Well, I think first the thing I would mention is things to watch. One is cabinet appointments. Treasury Secretary will be really key.
Yeah.
There's plenty of others to discuss as well, but also global responses. So what's happening in Europe? In Germany right now, really crucial. What's going to happen from China this week on the NPC? I think they're going to disappoint. So, yeah, I think it's, you're almost going to get a benefit from having a clearer view on what the administration looks like and the global response looks like before making any decisions.
My dear friend who's off today is someone I love and admire, Karen Cho, but we argue a lot on air. It's like we've been married for years. Can we put up the medium-term chart of the Eurodollar, team? Thanks. And we argued yesterday again on air. It's very unseemly, but I think the viewers like it on Eurodollar. And I said I cannot believe that Eurodollar is so calm. It's like for the last year and a half, it's kind of like in a 4-cent range or a 6-cent range or something. Look at it. I mean, actually, have you got the? Yeah, give me a longer term chart on that one. But my point being is there, 106, 111. Yeah, there you go. Look at the right-hand side of that screen. Since late 2022, it's barely moved. How is the euro as strong as it is, given everything? And you mentioned Germany there, and again, given all the problems Europe has got, and actually compared to the growth that the US has got and potentially could have.
Yeah, I think what's striking is one positioning. From asset managers, hedge funds, got very short euro over the last month and a half leading into the election. So same point earlier on rates, people had the Trump trade on, which was short euro dollar, and now they're taking profit for now.
Yeah.
I do think that a lot of these negative impacts from tariffs, things like that, could be more of a 2025 story, right? You mentioned it yourself, it'll be 2.5 months before he's in office. But Q1 is shaping up to be a very challenging time for Europe. Yeah. The moratorium on EU steel and tariffs ends in March. You've got a snap election in Germany probably in Q1. It's going to be a lot of cross currents, and I think that euro weakness can come back in the next few months.
Great. Well, we have to leave it there. Well done. You're another person who's pretty much survived the week. It's been extraordinary, historic. Nice to see you, Eric. Thank you very much for your time. Eric Nelson, macro strategist at Wells Fargo. Right, Bank of England. Almost got missed, didn't it? Well, not by me. I was there all day. Bank of England cut its key rate by 25 basis points, lowering it to 4.75%. The MPC voted 8-1 with only Catherine Mann, the so-called hawk, dissenting to keep rates on hold. The bank said future cuts will be gradual, as it expects the Chancellor Rachel Reeves' recent budget to spur growth. Yeah, they said about 0.75% over the next year and about 0.5 on inflation. So I sat down with the Bank of England governor and asked whether he's worried about the rising trend of global debt issuance. It's the same point I keep making, and whether those risks will increase under a Trump presidency.
The UK is a very open economy, so we do have a very strong interest in what happens elsewhere. And I think I said this morning, in the press conference this morning, that when we analyse what are the underlying forces often driving movements in UK rates, then, for instance, developments in the US are important in that respect. I don't think there's anything particularly surprising about that, by the way. So we watch it very carefully. I think the UK government, and I know the Chancellor has been very focused on this, is very focused on the sustainability of the UK fiscal position. But let me say one thing there. One of the most important things is, and I know both the previous government and the current government here emphasise this, is raising the potential growth rate. Because if we have we've got very, by recent historical standards, low potential growth. If we raise the potential growth rate, the fiscal sustainability issue gets easier.
But if the government and public spending goes up by a greater proportion than the bang for the buck we're going to get from the extra growth rate, then we're going to be stuck in a terrible loop, aren't we, where actually we're going to have higher debts for longer, greater interest payments as a nation. That's going to eat up more of that growth going forward.
Yeah, but I strongly agree with the Chancellor, and by the way, with the previous Chancellor as well, that actually raising the UK potential growth rate is a way to ease this situation and tackle these very big structural headwinds that we're...
But Andrew, I know I've got to finish, but then you would have agreed with the quasi-attain budget as well, because that was all about growth, wasn't it?
No. I mean, sorry, yeah, there are many ways to raise potential growth. They have to be credible.
You can watch my full... Go and watch my full... Not when you're watching Squawk Box, of course. In fact, if you can do both, you can do that. How about that? You can watch my full interview with the Bank of England Governor on our website, CNBC.com. Coming up on this show, German industry leaders call for a snap election following a coalition collapse. Is Scholz listening? Well, I don't know. We're going to bring you the exclusive interview we have with the Siemens Energy chairman, Joe Kaeser, one of the most important men in German industry. Plus, the Fed cuts rates by 25 basis points with Chair Jerome Powell says he's feeling good about the economy. And we'll be speaking to the former Prime Minister of Sweden, Carl Bildt, at 7:30 GMT. I love being bemused. I guess that's part of why I'm a journalist. Bemused at why politicians do things, why they don't do other things. And if you say I'm going to have a confidence vote, you kind of think, oh, we have a confidence vote this week or next week or in a couple... No, confidence vote in Germany, January. Mad. German industry leaders have urged the government, though, to hold a snap election, not a confidence vote, a snap election as soon as possible in order to address key economic challenges in the country. This after the Chancellor Olaf Scholz dismissed his finance minister Christian Lindner, leading to a breakup of the ruling coalition. Annette, there are some things that are wonderfully German. Holding a confidence vote in January seems to be one of them.
Yes, exactly. It is sort of tied to each other because according to the German constitution, you first need to have a vote of confidence, and then the president of Germany can disassemble parliament, and then you can have new election. That all is because of historic reasons. In the Weimar Republic, we had various overturns of parliament which didn't go very well, and then in the end it was the Nazi party seizing power. So I spare you the details, but we can all go back to the history books. So that's why it is a bit of a complicated issue here in Germany. So what needs to be done is a vote of confidence as soon as possible. And that's what Olaf Scholz, the Chancellor, seems not to really to want. He said, according to reports also to Friedrich Merz in a meeting, listen, I've offered a vote of confidence in January and that's it. And only then in March will be new elections. And the situation is quite fluid because clearly the majority of Germans, according to a poll, want to have this vote of confidence as soon as possible, want to have snap elections as soon as possible because they want to move on and have a new start for Germany and also for the government. We'll see whether he will bow to the pressure or not. But one thing is clear, the longer we wait, the more damage could be done to the economy. That's at least what also Mr. Kaeser, Joe Kaeser, the chairman of Siemens Energy, yesterday told me in an exclusive interview. Perhaps we listen in on what he thinks about the timing of the election.
It's time now that we start and have a new beginning. In Berlin, it's been quite an agony for quite some time. And I mean, the businesses don't need a lot of good advice. They need sort of stability of the political framework. And that has been missing for quite some time. So I believe this is now a good time for a new beginning, and then we'll take it from there.
Currently, it's not quite clear whether this vote of confidence will happen sooner or only in January. What would be your preference?
Well, look, I'm actually in Washington, D.C. and was there for the last 3 days, which was sort of a historical place at the historical date. So it also sort of caught me from far away. I was surprised, I have to say, when I was seeing the news that it takes so long to have this so-called vote of confidence in January. I think that all the signs which are on the wall pretty much already have an answer to that vote of confidence. So I was surprised that it took so long. I think the sooner we have a new start and let the people decide on who they want to have as a government, the better off our country is.
So if you look at statistics, it's really impressive that Germany has lost loads of investment just in the last 3 years of that three-way coalition because they couldn't agree on anything. There was always a change of rules. All of a sudden, things were looking very different. So there was no security when it comes to rules and regulation. And that was actually one of the reasons, next to the high energy prices, that people didn't invest anymore in the country. And that needs to change to stay competitive, to invest in new technologies, etc. So I asked Mr. Kaeser as well what he thinks, like number two, the top three items on his agenda, what needs to be done to get Germany up to speed again.
Germany is not alone. It's my home country, and I love it, and I'm proud of many things they have achieved. But they're not alone in this planet. So, and there is a lot going on. I don't need to tell you and the audience about it. So we need to have a clear set of rules, and that this is what we're going to do, and this is how we execute. And to run a country is not that much different as to running a company. You have to have a purpose. You have to have a strategy. You have to have a sort of milestone execution. We need to talk about what are the future inventions we need to have, the products and services which support the export model. The country's GDP, it will never be sufficient, to support the productivity which we need to keep our wealth.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.